what is happening with the mortgage rates again? You'll want to stick around and watch. This is Kasama Lee, your community realtor. So it is normal to kind of see volatility in mortgage rates. I know we were doing so great and it was a downtrend, as you can see on this chart right here. And just of recent, in March particularly, rates had gone up. It kind of looks like a spike, right, on the chart that went back up. Well, I've got news for you. It is normal for mortgage rates to have some volatility, some movement, right? It was looking really great, and then this past month, it kind of inched back up. And here are the reasons why. By the end of this video, it's my hope that you have a better perspective of what's happening with the mortgage rates and whether you should really be concerned and go, bite your nails and, pull the plug and now not be engaging in the home buying, or should you just stay in and ride this little bump of volatility out? You will have a better idea by the end of this video. If you enjoy this type of content, you want to hit subscribe and the bell notification so you don't miss future videos. We've got a lot of great nuggets about the housing market, what's going on in our area, and your like, your support, your comment, your sharing the video, your viewing is what's going to keep growing this channel, and I am so appreciative of that. So here's the thing. Mortgage rates are directly tied to global events. We have currently some economic uncertainty, so of course the mortgage rates are going to be affected by it, which is what you kind of have been seeing in the month of March. As Investopedia explains, mortgage rates don't move in isolation. When global events inject uncertainty into financial markets that can ripple through to borrowing, mortgage costs can respond quickly to geopolitical developments. As long as uncertainty remains elevated, rate swings may continue. And that's why, and I've said this before, trying to time the market is not the best move to your benefit, because you cannot control what is happening with the global events and current economic situations. What you can control is choosing to refinance at some point when the right time comes, when that right time comes. Now, let's talk about what you can control. Your credit scores. Yes, you can actually focus on what your credit profile looks like. According to Bankrate, your credit score is one of the most important factors lenders consider when you apply for a mortgage, not just to qualify for the loan itself, but for the conditions. Typically, the higher your score, the lower the interest rates and better terms you'll qualify for. So make sure that you get with your trusted lender who's able to, any good lender will be able to walk you through how to prepare your credit scores. So if there's some things that maybe you should consider paying off that would help your credit score, a reputable, knowledgeable lender should be able to walk you through that. Now, one thing I will tell you from what I've learned just being years in the field, paying off your credit cards don't necessarily contribute to a better credit score. Only certain types of revolving credits that it would help. So get with your trusted lender and sort that out. Don't try to figure this out on your own. The other tip I can give you is, if you have credit cards sitting out there and you're not using, don't cut it up. Well, actually, you can cut it up. Just don't close the account, because closing your credit card accounts can actually work against your credit score, believe it or not. Again, get with your trusted lender. They can help verify and walk you through your situation. Everyone's situation is unique and is different. So these are just a couple of tips that I want to give you, but you really want to just have your entire credit profile be reviewed by a trusted lender. And if you don't have one, reach out to me and I will get you connected. The second piece you can control is the loan type, the type of loan that you are getting approved for. Now, when you're speaking to, again, a trusted lender, an expert lender, they will be able to help you analyze the type of loans that would be best for you. I mean, we're talking, there's FHA, right? There's conventional loan, there's VA loan if you have the veterans benefit. So there are different types of loans that you should look at and discuss and review with your trusted lender. According to Consumer Financial Protection Bureau, CFBP, it states that there are several broad categories of mortgage loans, such as conventional, FHA, USDA, and VA loans. Lenders decide which products to offer, and loan types have different eligibility requirements. Rates can be significantly different depending on what loan type you choose. A third factor that you can control is the length of your loan. So whether you have a 10-year loan, a 15-year loan, a 20-year loan, a 30-year loan, 35-year loan, 40-year loan, see the typical loan length that we see is 30 years, but you have all these other choices that sometimes don't get discussed, but you can certainly take a moment and ask your favorite lender about that. According to Freddie Mac, when choosing the right home loan for you, it's important to consider the loan term, which is the length of time it would take you to repay your loan before you fully own your home. Your loan term will affect your interest rate, monthly payment, and the total amount of interest you will pay over the life of the loan. Again, this whole video is about getting with the right lender and really understanding the type of loan that you can be approved for and being smart with the numbers and the different scenarios that may be available. So if you are interested in starting that first process, because here's the thing, our team, we do not take the buyer out to look at houses until we know what they are approved for. It would be a complete disservice for us as real estate agents to start showing you homes when you don't know if that is within your purchasing power, whether that is the amount you're approved for. So that's the first thing we're going to do with you anyway. If your first step is to get with the trusted lender who's going to have your best interest at heart and you don't know who to go to, contact me and I will be more than happy to get you connected. I hope this has brought some clarity to the things that you have control over versus worrying about what the market is doing, what the volatility of the interest rates are doing, what the global events are doing. You've got zilch control of any of those factors, but you do have control over what you do when you apply for a loan. I hope this has been helpful to you. Thanks for watching.